Good morning. Welcome to your daily morning digest for Tuesday, February 10th, 2026. I'm your host, bringing you 15 minutes of markets, crypto, tech, and life wisdom to fuel your day. Let's dive into what's moving the world right now. Markets stage dramatic recovery after tech meltdown. We're starting with a wild week on Wall Street that had investors on a roller coaster ride. Last Thursday, February 6th, the Dow Jones Industrial Average crossed 50,000 for the first time in history, soaring by 1,006 points or 2.06% in a single session. This was the market's best day since May of last year, and it marked a stunning reversal after 3 consecutive days of brutal selling. So what triggered this volatility? The answer lies in growing concerns about artificial intelligence spending. Tech stocks had been hammered for 3 straight days as investors began questioning whether the billions of dollars being poured into AI development would actually generate proportional returns. Major software companies saw their shares tumble as doubt crept into the market about AI's near-term profitability. Microsoft shares dropped 10% during this period, dragging down software stocks across the board. But here's what's interesting: the sell-off created what many investors saw as a buying opportunity. When the Dow jumped over 1,000 points on Friday, it was classic buy the dip behavior, investors betting that the AI revolution is real, just overheated in the short term. According to Morningstar's February outlook, we're seeing some interesting sector dynamics. The consumer defensive sector has become overvalued, trading at a 17% premium to fair value. Basic materials are also stretched at a 10% premium. Meanwhile, the technology sector has actually become undervalued as these recent sell-offs combine with rising fair value estimates. This suggests that despite the volatility, tech fundamentals remain solid. The key takeaway here is that we're in a market trying to reconcile massive AI infrastructure investment with realistic return timelines. Expect continued volatility as this shakes out. Bitcoin's wild swing, from $61,000 to $70,000 in 24 hours. If you thought traditional markets were volatile, the crypto world just said hold my beer. Bitcoin experienced one of its most dramatic price swings in recent history last week, crashing to below $61,000 on Thursday, February 5th, before rebounding sharply to around $70,000 by Friday. Let me put this in perspective: Bitcoin dropped 30% in a single week. It briefly broke through $61,000, a price level not seen since late 2024. The flagship cryptocurrency is now sitting 44% below its October peak, firmly in what many are calling a crypto winter for 2026. What drove this massive sell-off? It's directly connected to the broader risk-off sentiment that gripped financial markets. As stocks tumbled and investors fled to safety, crypto took a particularly hard hit. According to data from CoinGlass, more than $2 billion worth of Bitcoin long and short positions were liquidated since the sell-off began. That's liquidation on a massive scale, creating a cascading effect as margin calls forced even more selling. But here's where it gets interesting: despite falling below $70,000, a level that's now being watched as a critical support, Bitcoin managed to bounce back relatively quickly. This suggests there's still substantial buying interest at these lower levels. The question is whether this represents a bottom or just a temporary relief rally before further declines. What's particularly notable is that this crypto crash happened alongside declines in traditional safe havens like gold and silver, suggesting a broader deleveraging event rather than a simple rotation out of crypto into other assets. Investors were raising cash across the board. For anyone watching the crypto space, the $70,000 level is now your line in the sand. If Bitcoin holds above this, we could see stabilization. If it breaks below again, we might be headed for a deeper correction. Goldman Sachs and Anthropic bring AI agents to banking. Now let's talk about a partnership that could reshape how banking works. On February 6th, Goldman Sachs announced a collaboration with Anthropic to deploy AI agents that will automate complex banking tasks. This isn't just chatbot technology, we're talking about AI systems that can handle sophisticated financial operations with minimal human intervention. This announcement is part of why we saw such dramatic reactions in software stocks last week. Anthropic's AI tool, which adapts workplace assistance for white-collar industries, represents a fundamental shift in how knowledge work gets done. When investors realized that AI could potentially replace expensive software subscriptions and even some professional services, they started repricing software company valuations. The technology is based on what the industry calls reasoning models, AI systems that can break down complex problems step by step rather than just pattern matching. This has become the new paradigm for best-in-class AI problem solving, and Goldman's bet on this technology signals that major financial institutions believe we're past the experimental phase. But here's the paradox the market is wrestling with: if AI makes banking and professional services dramatically more efficient, who benefits? The banks that deploy it? The AI companies that build it? Or will competition force all those efficiency gains to flow to consumers in the form of lower prices? That's the trillion-dollar question investors are trying to answer, and it's why we're seeing such volatility. NVIDIA unveils Vera Rubin AI platform. Speaking of AI infrastructure, NVIDIA made waves at CES 2026 by officially unveiling its latest flagship AI platform, codenamed Vera Rubin. For those who follow the space, NVIDIA's naming convention honors pioneering scientists, in this case, astronomer Vera Rubin, who discovered dark matter. While technical details are still emerging, this represents NVIDIA's next generation of AI computing power. The company continues to dominate the market for AI chips, and each new platform release resets the bar for what's computationally possible. We're seeing a clear trend toward more specialized AI hardware as the industry moves from general experimentation to specific applications. The broader tech narrative for 2026 is this shift from hype to pragmatism. According to MIT Technology Review, we're seeing advancements in small models, world models, and edge computing that will enable more physical applications of machine learning. Translation: AI is moving out of the cloud and into robots, vehicles, and everyday devices. This is why tech stocks, despite recent volatility, remain a key part of long-term portfolios. The infrastructure being built now will power the next decade of innovation. Winter Olympics drama, medals breaking in athletes' hands. Shifting away from finance for a moment, let's talk about an embarrassing situation unfolding at the Milan Cortina 2026 Winter Olympics. Multiple athletes have reported that their Olympic medals are literally breaking, not metaphorically, but physically falling apart after they receive them. Imagine training your entire life for Olympic glory, finally standing on that podium, and then your medal starts disintegrating. That's exactly what's happening to some competitors in Italy right now. The organizing committee released a statement saying they're looking closely at the issue, which is diplomatic speak for "we have a serious quality control problem." This might seem like a minor story, but it's actually quite significant. The Olympics are supposed to represent the pinnacle of human achievement and excellence. When the medals themselves can't withstand basic handling, it undermines the entire symbolism of the event. There will definitely be some serious questions asked about procurement and quality assurance after these games conclude. On a brighter note from the sports world, Super Bowl 60 recently took place, with Kenneth Walker winning MVP honors. What made this particularly special is that it was the first NFL game his father had ever attended to watch him play. Sometimes the personal stories behind the statistics are what really matter. Space debates and global developments. Looking at broader global developments, today marks the launch of the UN's first-ever space debates on how space technology can support sustainable development on Earth. This is happening as part of a special industry symposium on February 10th, that's today. It's a reminder that while we're focused on earthly market volatility, humanity's reach continues to extend beyond our planet. Meanwhile, geopolitical tensions continue with protests erupting across Australia over Israeli President Herzog's visit. Demonstrators are accusing Herzog of complicity in civilian deaths in Gaza, highlighting how the ongoing Middle East conflict continues to reverberate globally. The world remains complex, interconnected, and frankly, unpredictable. Markets swing wildly on AI concerns. Crypto crashes and rebounds in 24 hours. Olympic medals break. But through it all, innovation continues, whether it's Goldman Sachs deploying AI agents or the UN debating how space can solve Earth's problems. And that brings us to the key insight for today: in a world of short-term chaos, focus on long-term transformation. The AI infrastructure being built, the space technologies being developed, the financial systems being reimagined, these are the currents that will shape our future, regardless of daily price swings. And now, let's shift gears to today's Life Wisdom segment. Life Wisdom, specific knowledge and leverage. Today's wisdom comes from Naval Ravikant, entrepreneur, angel investor, and one of the most insightful thinkers on wealth creation in the modern era. The topic is specific knowledge and leverage, two concepts that, when combined, form the foundation of how wealth is actually created in today's economy. Naval has a famous quote: "Wealth is not about money. Wealth is about freedom." And his framework for achieving that freedom centers on developing what he calls specific knowledge that cannot be trained for, that is unique to you, and that you develop naturally based on your interests, talents, and experiences. Think about what we just discussed in the news segment. Why is Goldman Sachs partnering with Anthropic? Because Anthropic has specific knowledge about building AI reasoning systems that Goldman can't easily replicate in-house. Why does NVIDIA dominate AI chips? Because they built specific knowledge about parallel computing over decades that competitors are struggling to match. But here's where it gets interesting for you personally: specific knowledge isn't just for tech companies. It's available to every individual willing to pursue their authentic interests deeply enough. Naval argues that specific knowledge is found by pursuing your genuine curiosity and passion. It's knowledge that feels like play to you but looks like work to others. You can't be trained for it through traditional education because it emerges from the unique intersection of your interests, experiences, and natural talents. For example, someone might have specific knowledge about the psychology of online community building gained from years of moderating forums and studying human behavior. Someone else might have specific knowledge about sourcing rare materials from obscure suppliers worldwide. Another person might understand the subtle dynamics of how enterprise sales actually happen in a particular industry. This knowledge is valuable precisely because it can't be taught in a classroom or learned from a manual. It's tacit, contextual, and often invisible to those who don't have it. But specific knowledge alone isn't enough. This is where leverage comes in. Naval identifies 4 types of leverage: labor, capital, code, and media. In the old economy, leverage meant managing lots of people or controlling lots of money. In the new economy, code and media have become the most accessible and powerful forms of leverage. Code means software: write it once, run it 1,000,000 times, serve 1 billion users. Media means content that spreads, create it once, distribute it infinitely at zero marginal cost through the internet. These forms of leverage don't require anyone's permission. You don't need to convince investors or hire employees. You can start leveraging your specific knowledge immediately. Let's bring this together practically. Your mission is to identify your specific knowledge, the thing you're uniquely good at that feels effortless to you, and then apply leverage to it. If you're great at explaining complex topics simply, that's specific knowledge. Apply media leverage by creating educational content online. If you understand a particular niche market's pain points deeply, that's specific knowledge. Apply code leverage by building a software solution. If you can spot undervalued opportunities in a market others overlook, that's specific knowledge. Apply capital leverage by investing or building a business. The key insight is this: you can't compete on general knowledge anymore. That's all being commoditized by AI and global connectivity. But your specific knowledge, the unique combination of skills, experiences, and insights that only you have, that remains valuable and defensible. Here's your action step: ask yourself this question today: what do I know how to do that others can't easily learn, that comes naturally to me, that I'd do even if I wasn't paid? That's your specific knowledge. Then ask, how can I leverage this through code, media, capital, or people to create value at scale? Don't try to be good at what everyone else is good at. Find your edge. Develop your specific knowledge obsessively. Then apply maximum leverage to it. The Goldman Sachs partnership with Anthropic? That specific knowledge meeting capital leverage. The NVIDIA AI platform? That specific knowledge meeting code leverage. Your opportunity is out there waiting. It's at the intersection of what makes you unique and what the world needs. That's your life wisdom for today. Build what only you can build. Know what only you can know. Then scale it. This has been your Daily Morning Digest for Tuesday, February 10th, 2026. 15 minutes of markets, crypto, tech, and wisdom to fuel your day. Stay curious, stay sharp, and I'll see you tomorrow morning.